Hi friends, welcome to my YouTube channel Trader Chitra. In this video, we are going to see how to trade using EMA. The EMA which we are using is 5 EMA and 20 EMA. Before going to that, I will explain you what is EMA. EMA is nothing but exponential moving average and SMA is simple moving average. Moving average is the average price of the trading instrument for the particular period of time. Instrument can be either index, stock or currencies, and the time period can be 5 minutes, 15 minutes, 1 hour or 4 hours or daily time frame. Any time frame you can choose according to which type of trader you are. And also moving average helps to make the price action very easy and helps to trade according to the direction of the market. Now EMA or SMA, which one we use depends completely upon the strategy which we are using. SMA is closing price of the N periods divided by N. And EMA how we will calculate, this is the formula for calculating the EMA. And why we use EMA means it will give the fast entry and exit for the particular trade. Here we can see two pictures, one is without EMA, the other is with EMA. Without EMA, in this picture, we know that the price is going in an upside direction. But we don't know from where the price can reverse. So, in order to understand that, we are using EMA. So, here we can see the price is above the EMA. So, the market is in the clear uptrend. We are able to understand with this picture. But where to book the profit or how long we can keep our trade, we can understand easily with the help of EMA. So when we see here the red candle closed below the EMA. So here is the place where we can book our long profits. Which moving average I use to check the market momentum? I can say it is 5 EMA and 20 EMA. Why 5 EMA? Because 5 EMA you can use as a trailing stop loss if you are in a long trade or in a short trade. 20 EMA is like a pullback support. Also, 20 EMA acts like a bounce line for the candlestick. What is this means? Say for example, if the price is in a downtrend, price will also head down, but at some point of time, you can see that the price will rise up and head to test the 20 EMA line. And if the downtrend is very strong, you can see that the 20 EMA line will push back the price down. Now we can see the 5 EMA and the 20 EMA crossover. Here we can see that the red EMA is the 5 EMA and green EMA is the 20 EMA. And this is a bullish crossover and here is example for the bearish crossover. If the 5 EMA is crossing the 20 EMA, it means that the price is going upside. That is a bullish crossover. Here we got the signal as bullish crossover has happened and price is heading up. And in this example, you can see that the 5 EMA crossing the 20 EMA, that is downside, negative crossover is happening here, means price is in the downtrend. Price is going to be in the downtrend. Till now, we have seen about 20 EMA and 5 EMA. Now, I am going to tell you about 200 EMA, which gives us double confirmation for us to enter into the trade. So, basically, 200 EMA is a long-term indicator which will helps the trader to identify the long-term trend. Till now we have seen about 5 EMA, 20 EMA and 200 EMA. We can see how these EMAs we can use in our intraday trading. Here I have taken Nifty chart. And you can use this strategy in Nifty, Bank Nifty and in stocks too. The time frame I have selected is 5 minutes. For this setup, we need to select the time frame as 5 minutes. Now, we will go to the indicators and we will add the moving averages. We will be selecting three moving averages, that is moving average exponential. For this strategy, we need 3 moving averages as I already told you. So I will go to the settings and first EMA we need is 5. So I am changing the length as 5. Style I am making the color as red. So the 5 EMA is ready. Next EMA is 20 EMA. So I am changing the length as 20 here. And I am making the 20 EMA as green in color. The third EMA is 200 EMA. 200 EMA as black in color. Now the setup is ready. If you see here, 5 EMA, 20 EMA and 200 EMA has given the bullish crossover. So the entry for the long side is above this green candle. The target can be based on the risk reward ratio, or else if any red candle closes below 5 EMA. In trending days, you can also go along with the 5 EMA. After this crossover, Nifty has given a big rally upside. You can see here. Nifty was going in full uptrend after the crossover has happened. So you can use this setup for your intraday trading, as the time frame we have selected is 5 minutes. I won't recommend you to take this for your swing trading or to keep the positions overnight. We can see for bearish crossover. If you see here, 5, 20 and 200 EMA has given the bearish crossover. After this crossover, Nifty has fallen down drastically. So the target is based on the risk reward ratio, or else if any green candle is closing above the 5 EMA, you can book your profits there. In trending days, you can go along with the 5 EMA. The stop loss is the high of the red candle. The stop loss is high of this red candle. This is Reliance Industries. The time is 5 minutes time frame, and we can see that here we got the bearish crossover has happened. After that, Reliance has fallen down from here. 2721, from there it has fallen till 2605. This is the Bank Nifty chart, and here we got the bullish crossover. 5, 20 and 200 has given the crossover here above this green candle. So the stop loss is low of the green candle and the target is based on the risk reward ratio. So from there, Bank Nifty has given a big rally upside. So intraday traders can use this setup. Till now, we have seen bullish crossovers and bearish crossover. So whenever we get these types of crossover, intraday traders can enter into the trade and they can book good amounts of profits. You can use this strategy in Nifty, Bank Nifty and in stocks too. But before entering into the live trade, just do a backtest for 1 month, and after that you can use this strategy. Till now, we have seen 5, 20 and 200 EMA crossovers. This crossover will not happen daily. So in that case, how can we enter into the trade? For that, I have one more setup. We can see that now. Nifty has given a bullish crossover here. This candle. We can use 5 and 20 EMA crossover. When you see here the 5 and 20 EMA has given the crossover. So one can enter into the short trade below this red candle. So we can see after the crossover has happened here, market has fallen down. The stop loss is high of this red candle and the target is based on the risk reward ratio, or else if any green candle is closing above the 5 EMA, you can keep that as your target or trailing profits. So this is Bank Nifty chart. The 200 EMA is here and the 5 and 20 EMA has given the crossover here. So we'll see how can we enter into the trade here. So this green candle gave the confirmation for the long trade. So this is our entry candle, and the target you can keep as your 200 EMA. Target you can keep as 200 EMA, as 200 EMA is nearby. So we'll see how the trade is going now. So safe traders, they can book the target, they can book their profits here. But we will see how the trade went. We can see that there is a small bounce back happened. After that, market went in the uptrend. So this also you can use, this strategy also you can use, like 5 and 20 EMA crossover. The stop loss is the low of the green candle. The stop loss again the low of the green candle. We can see how many trades we got in Nifty based on these two strategies in the month of December. Here we got one trade. This is the sell trade. This is a trade number 1. This is trade number 2. Here we got an entry for the long side, and although the red candle came down but the stop loss didn't get hit. You see here the low of this candle is the low of this candle is 18,655.60, but the low of this candle is 18,655.90. So here we got the long entry, but our stop loss didn't get hit. So this is the trade number 2. And when we see here, this is a trade number 3. Here one more trade long entry we got. This is the trade number 4. And here we got the trade, but this is not my setup. This is 5 and 2 on DMA. So here we got another trade, 5th trade. Here we got one trade, but as 200 EMA is nearby, I will advise you to avoid this trade. Coming to the next trade, as this is a gap down, we will not enter into this trade. So here we got the another trade. This is 6th one. Here we got a long entry. So this is the 7th trade. So if we enter here, our target will be 200 EMA. We got our target here. And after that, this is the 8th trade. Here. So if you see, whenever we get the 5 and 20 EMA crossover, we can enter into the long or short trade. So if you see here, we got 8 trades till now, but there is not even one stop loss we got. So intraday traders can use this strategy, but before that you can backtest this, and after that you can enter into the live trade. I hope this video is useful to you. Please don't forget to like, comment and subscribe. Don't forget to click the bell icon. Thank you friends.